over 2,000 employees became crore-patis in the journey of Persistent.
Meet Anand Deshpande, founder, chairman, and managing director of Persistent Systems.
At that point, people didn't know what it was and people didn't value it. We just said, just keep it, you will not regret it.
Survived the dot-com bust, the 2008 financial crisis, and took his company public with now having a revenue of $1.5 billion.
Do you advise companies to go for an ESOP scheme?
Yeah, absolutely. I think ESOPs are a wonderful way to share wealth.
When do you think a company is truly ready for going public?
So when you get investors from outside, the best way to give returns was IPOs. Rushing into an IPO is also not a great thing.
Mentored over thousands of CEOs and entrepreneurs.
All CEOs, you can't do everything. You have to pick your priority, your list of 7 to 8 things. For everything else, 100% delegation.
Since 1990, helping businesses across industries accelerate their digital transformation.
What are the big opportunities that you're seeing for an entrepreneur who's in India?
I'll answer your question in a little different way. So in 2008,
Watch till the end to know how you can start your wealth creation journey from ESOPs.
Anand, we are in IPO season. There are a lot of IPOs happening, and for a lot of entrepreneurs, that's like a massive milestone that the company gets to. Your own IPO happened. Over 2,000 employees made over a crore or became crore-patis in the journey of Persistent. How did you think about ESOPs first? Like, when did ESOPs enter the Persistent journey?
so our first round of ESOPs happened in 99-2000. So we were like 9 years in the business.
Okay.
And we started out doing ESOPs pretty early on.
Hmm.
We were working with Silicon Valley companies,
Hmm.
and we had reached a stage where many of our customers were offering employees of our company their ESOPs, and we said, hey, this is too complicated. We need to have our own ESOPs for people. So we did our own ESOP scheme in 99-2000. At that point, people didn't know what it was and people didn't value it. When we did the first round of investment that we got in the company from Intel Capital, that's sort of when it got priced for the first time. And till 2007-8, of course, people didn't realize what's going on. But in 99-2000 onwards, for a very long time, pretty much everyone had ESOPs in the company, almost all the employees. And then 2008-10, when we went public, a lot of the people who had options, their options started to get priced, and they started to see some value in them. And then, of course, in the last 5 to 6 years, the business has also grown quite a bit, and the valuation has also gone up significantly.
Yeah.
And so people who are holding on to these options from the very early days have seen good value for their money.
Yeah. And like when you think about as a founder creating an ESOP policy, there are so many variables. There is the question on over what period should it vest? How should these be treated after somebody exits the company? What should be the strike price? How did you go about thinking about all of these aspects? Like what was the framework in mind?
Yeah, absolutely. So we had set it up in the early days as a 10, 20, 30, 40% vesting rather than a straight line vesting.
Okay.
The whole intention was to hold people on. Doing small amounts, but over a long period of time.
Sure.
So you keep getting every year, but then it's like this. So we did this till about 2006-07. After that, things were very different, and then we were starting to hire differently. So people expected that, oh no, this is too 10, 20, 30, 40 is not right. We should do more even. So schemes changed after that a little bit.
And like how do you go about like explaining the concept of ESOP at a time to the employees at a time?
No, many people, they didn't know, but we just said, just keep it. You will not regret it.
Okay. And was there a trade-off between the cash compensation that they would get?
No, not really. But there were small amounts of ESOPs at that point. Company was also very small, and I wanted to make sure that these things can last long enough.
That's right.
So the numbers were relatively small,
Yeah.
but over the years, these numbers have become big now.
Yeah. And is that something when you think about a company transiting from one curve to another as they get on leadership, which extends beyond the founder, do you advise companies to go for an ESOP scheme?
Yeah, absolutely. All the time.
Yeah.
I think ESOPs are a wonderful way to share wealth.
When do you think a company is ready, truly ready for going public? When did you feel that Persistent was ready to go public?
There were many reasons that went into our decision to do an IPO. One, of course, was that many other companies like us had already IPO'd.
Hmm.
We were one of the later ones in the pack of IT companies. If you look at them, they were all listed even before us.
Yes.
And we were looking at an IPO in 2007 when the market just kind of cratered out. So we kind of pulled our DRHP
Hmm.
and filed again after the market improved.
Hmm.
And then I had taken VC investment in 2005.
Hmm.
So when you get investors from outside, the best way to give returns was IPOs.
Yeah.
And I would say that, rushing into an IPO is also not a great thing
Hmm.
because the aftermarket and all that stuff becomes tricky. And unless you have people who are going to buy your shares in the future,
Yeah.
just going IPO is not a great thing because you'll get that one-time thing, but
Yeah.
you need the market to sustain you for many years after that.
Hmm.
And that's not that easy. So once you have the right scale and the right level of mindset and compliances in place, then you should think about doing an IPO.
And did life materially change for you given the quarterly earnings calls?
Yeah, definitely. Though we were doing disclosures on a quarterly basis for many years before the IPO, but it does force a certain kind of a short-term thinking in some sense because every quarter the investors kind of are tracking certain numbers
Hmm.
and they have some very rigid set of benchmarks, I guess, or their templates.
Hmm.
And if you don't fit in their templates, then they can not treat you well.
Yeah.
So a little bit of that has to happen, but yeah, meaning once you get used to it, then people manage that. So yeah.
So did you get better at narrating the story
Yeah.
also?
No, definitely not just that, we were also able to understand how to what the investors are looking for and what we need to present.
Hmm.
But in general, what I find is that if you are clear and open about your disclosures and you share what's going on and you're not second guessing each other, then it's much easier because then you can get some
Hmm.
support from investors as well because they also know that these are all businesses and you have ups and downs.
Hmm. And then you've also seen some of the most fantastic CEOs. You've yourself been an excellent CEO. What are some of the CEO traits that you feel a founder should embody?
Actually, I'll answer your question in a little different way.
Hmm.
So in 2008, I met 150 CEOs
Hmm.
of customers of ours.
Hmm.
After meeting them, I said, what do I see
Yeah.
in CEOs that is not there in non-CEOs? So I came back with 3 basic themes that I find CEOs do differently from non-CEOs. So I'll just share that with you and then that can relate to some of this stuff. So first is that, all CEOs, you can't do everything.
Hmm.
You have to pick your priority, your list of 7 to 8 things that are in your priority list.
Yeah.
And that's what they focus on. For everything else, they delegate.
Yeah.
100% delegation. Then they trust the person to do the job. So what I found is that if I'm selling to the CEO, if I'm not in his priority list,
Hmm.
then the CEO is not very interested in
Yeah.
spending time with me. They are just saying, yeah, this is great, but work with so and so
Hmm.
and
Hmm.
push you off.
Yeah.
So that was very, very important for me to observe that.
Hmm.
The second thing I found is that all CEOs get basically measured on top line
Hmm.
rather than the bottom line.
Hmm.
So if you're not providing services to people that help them in their top line, they're not terribly interested in buying from you.
Hmm.
And the third thing I observed from looking at CEOs was that CEOs really like to network a lot.
Hmm.
So they want to meet other people, they want to chat with them and all
Yeah.
that. So that changed how we sell quite a bit.
Yeah.
Before that, I would basically go to a meeting and not tell them who else I work with and all that.
Hmm.
But after I realized that they really want to know and they're happy for me to share, even if I work with their competitors, introduce them to their competitors,
Yeah.
they like all this kind of networking.
Yeah.
So that really helped me a lot in trying to change how we sell as well.
Hmm.
So what I find is that if I'm a salesman trying to sell to CEOs,
Hmm.
these are the 3 things that I would say. One is focus on CEOs focus on top line. They have a list of priorities. So if you try to be in their list of priorities,
Sure.
and they like to network, so introduce them to people. If you introduce them to people, that gives you value
Yeah.
to meet them again as well.
Correct.
So those are the things that I found in general when I look at CEOs. When you sell to CEOs,
Hmm.
of course, if you want to be a CEO, you should do some of those things as well.
Yeah.
But CEOs do more things than just these 3 things. Is
Yeah.
how I'd say.
And you've recruited CEOs also. Like when you recruit a CEO, How are you thinking about what are some of the things that they should have?
Well, you don't recruit CEOs too often, so that may not be that useful in general. But I can share with you what I look at when I'm looking at slightly mid-level people, senior leadership people, when I'm trying to recruit them.
Hmm.
So in our business, right, we have three broad things that are essential.
Hmm.
One is sales.
Hmm.
Second is technology domain expertise, basically. And third is operations,
Hmm.
keeping the trains running on time.
Hmm.
So when I'm looking for someone at the senior level,
Hmm.
I want to have someone who has excellent capabilities in one of these three
Hmm.
rather than okay capabilities in all three.
So sales, domain expertise, and running operations.
Yeah. So you should be good at one of them,
Hmm.
really good at them.
Yeah.
So if I meet somebody, the first thing I ask them is, which of these three are you good
Hmm.
at?
Hmm.
Pick one.
Hmm.
And then I want to probe to see how good are you really in that particular area.
Hmm.
So that's what I find is very important. So by this time, if you want to be in that situation,
Hmm.
you should be an expert at one of these three things.
Yeah, I think that's an interesting insight there. Anand, I want to switch gears now. One of the challenges sometimes, does the founder get in the way of growth of the company?
That can happen.
And at which point should you get an external CEO to run the company and step up if there was such a thing?
Well, it can happen, and there are different ways to look at it.
Hmm.
In my case, again, I made that transition in 2019,
Hmm.
and partly it was driven by the fact that I was running the business for nearly 30 years,
Hmm.
and I was trying to see my next 30 years, and I found that there were so many things
Hmm.
that I thought I should be doing, which I was not getting a chance to do.
Hmm.
So it was a good opportunity. There were some regulation changes that were also being discussed.
Hmm.
So I just felt right that I use this opportunity to think about bigger, broader things rather than just be stuck with persistent,
Hmm.
which was the only thing I did for 30 years.
In this course of the journey of building persistent, you also built personal wealth, both as shareholder of persistent and even otherwise. What have been some of the philosophies around your own wealth creation journey? How do you invest? How do you think about deploying capital for growth? What's the framework there?
So right now, the way I allocate funds, I would say I would put them in 4 or 5 buckets.
Hmm.
So one bucket is my expense bucket,
Hmm.
and right now, my expense buckets are mainly in travel and learning, things of that nature, and
Hmm.
basic things that we do.
Hmm.
And we are sort of trying to travel at the moment, partly because when you are in that zone where you can travel, so I see we have like 5-7 years that we must make the most of it.
But courtesy
After
of
that,
longevity, you'll probably have much
no, the
longer.
longevity will work for those who are in their 20s more than those who are in their 60s. We have already consumed too much bad stuff. But that's one set of things. The second activity that I've been, of course, we partner with people like you and put money, allocate funds to sort of long term legacy type
Hmm.
portfolio to ensure that the next generation or whatever can have something that
Hmm.
can go on.
Hmm.
And I really believe that many of these sort of share markets, mutual funds, all of them,
Hmm.
the companies don't make much money out of it. So if Bharat and India has to happen,
Hmm.
the money really needs to go to the companies.
Yeah.
Right now, when you do share trading, it goes from one broker to the other. It
Yeah.
doesn't go to the company.
Yeah.
So I try to invest some of this into companies directly
Sure.
through again funds that are doing it. So I'm really not quite ready to put my own time on
Sure.
identifying funds and all that. So I've been partnering with AIFs,
Hmm.
investing in them and tracking some of their things that are of interest to me,
Mhm.
and especially technology or other things. I don't do directly technology investments, but I don't do software, but I am very interested in this biology, next generation, deep tech, or any of these kinds of areas, or in general,
Hmm.
trying to see how livelihoods happen in these kinds of areas. So I try to invest in
Hmm.
funds that are interested in doing these kinds of things. And then finally, I have a bucket for philanthropy and giving.
Mhm.
And meaning again, I'm more focused on the asra and livelihoods and things like that. And I want to make the philanthropy actually deliver results. So I'm predominantly trying to focus on specific projects or activities where I wouldn't say I have control, but I am very much involved and I know where that money is getting spent. So hopefully
Mm.
can ensure that some results happen as well.
And given that you have such a clear sort of bifurcation between the areas where you invest, Do you also review the portfolio?
Yeah, I review it like that.
And what's the frequency of that? What's the structure of that?
No, it's not very frequent. Meaning, I'm not trying to optimize the numbers, and this sort of philanthropy bucket is a philanthropy bucket.
Yeah.
The money that is there in the growth investments is given to AIFs, so I don't see them every day or whatever, and I'm not managing an active stock portfolio because it's too much work. So meaning once in 2 months or 3 months is when I take a look at it. But especially when I have new funds coming in, or I know that there is new money that is coming in, or some requirements are there, and I try to look at balancing the inflow to different buckets, and I review how short am I on what my targets are.
And before I move away now from the entrepreneurship question, Anand, you meet so many entrepreneurs and you're seeing different businesses thrive and some not scale. What are the big opportunities that you're seeing for an entrepreneur who's in India?
From the entrepreneur's lens, I think they should look at their customer. From my lens, I'm not thinking about individual entrepreneurship or individual things. I'm looking at broad, big, impactful activities that might happen over the next 10, 15 years because I'm sitting in a very different kind of a context at the moment. And my objective is to think long term and impactful. So the three broad themes that I think are going to be very relevant worldwide, in my opinion, one is energy, biology, and intelligence.
So let's say on the energy side, what are some of the big themes that?
So, they relate to each other. All of these three things, in a sense, relate to each other in different ways.
Sure.
But I believe that if we look at the next 5 to 10 years, we will, 10 years out, I think we will be energy independent. In a sense, we would have created mechanisms where we self-fuel ourselves in some form or the other.
Yeah.
But the energy part is not just about generation of the energy, but if you're looking at devices and smaller devices or life extensions, you're talking about people where you're going to say, okay, you're going to swallow some pills which are actually mechanical gadgets and all that. Each of them is going to need energy. It's going to require energy to be at the right place, at the right time, right kind of things and all. So energy in all forms, whether it is small robots to nuclear plants to everything else, I think there is going to be a refresh on energy in a big way. And I think it's exciting to think about what might be the changes that can happen. And completely fresh look is what I think is going to happen in the next 10 years. So what we know of energy today and what you'll see in 10 years will be very, very different.
Yeah.
The AI revolution, which is intelligence, is also driving the need for this energy. But if you look at energy for life sciences and humans, for example, we do a human brain, let's say, operates at thousands of times more efficiently than the AI brain today because the amount of energy that is conserved.
Correct.
So there's a lot of sort of how these things are going to play into each other in a way. On the biology side, again, if you look at anything that you think about food, water, energy, again, plant health, animal health, everything is going to get redefined using next generation biology. Our ability to engineer biology, which is now starting to happen for the very first time, and manufacture biology is changing the way we think about science and the future of science.
That's right.
And in the last, I would say, 3.8 million years of evolution, we have only been observing it so far.
Yeah.
So biology has been a science of observation. You observe what has happened, but what has happened has been going on for the evolution over the years, right? But now you have the ability to
Alter it.
I wouldn't say alter it, but at least redefine things, re-engineer things, manufacture activities and all that. So I think all of this sort of plays into each other. But as I would say again, energy, biology, and intelligence are the three broad areas where I think India should also invest big time.
Yeah.
And this would be my deep science thing that I would think a lot about. That's what I'm spending my time as well.
Anand, in final question, I actually want to ask that you're covering so much ground across philanthropy. Within that, also so many different objectives. You're also chairing Persistent. You also run a portfolio. You also travel. How does this all come together? How do you manage time? How do you decide where to delegate, where to get involved? What's the process of
No,
Anand
so
Deshpande?
I'm very organized on some of these things. I allocate over a week or over a month portions of time for different activities.
Hmm.
Every Sunday, typically, I review my list of things I'm working on and try to make sure that I'm not over allocating on. So I'm optimizing on time rather than on tasks.
Hmm.
So yeah, meaning I have time for different activities.
Yeah.
And yeah, I monitor that and I take a look at it, and I have decent amount of time that I keep for learning and figuring new things out. So that's a big part of what I do right now.
Yeah. No, from the very early days, I remember meeting you, I think more than 10 years ago. The sense of organization comes through very clearly. You're very structured, and practically right through this conversation, I think we've learned that you have frameworks for everything. Anand, we've learned a lot from this conversation. You've covered a lot of ground. Thank you so much.
Thank you.
Really appreciate you being here.
Thank you, and wish you all the very best. And it's been nice talking to you.
Thank you.